everyone. I've got a trade set up here in order, and I'm gonna try to record the way I am thinking about setting up this order, like why is it here, and how's my usual setup creation. So first of all, this is 2000 tick chart. This is the trader weight, my standard setup: 2000 tick chart, 3-minute charts, 5-minute chart, 50-minute chart, 1 hour chart with daily chart. So we start from the high time frames and make our way to the downside. I'm going to explain why the limit order for the long position is in here just in a minute, but I will not cancel the order and put it up at the end because it might get hit. Meanwhile, I'm explaining, so let's look at daily. This is daily chart, and first of all, what we're going to do is to mark the high and the low of the previous day. We can see that the S&P 500 is in a sort of downtrend. Okay, so let's just sorry, let me turn this on, and this is the previous day. So the low was at 58.09. We draw in like this. I'm sorry, we adjusted 58.09. So that's our oh, somehow I flipped it up, didn't I? I flipped that one up. Okay. The technology is not my strong suit, as you can tell. So let's try this again. Son of a gun. Okay, so 09, right? Let's just do it this way. Save. Okay, and the high of the previous day is 58.83.25. So let's just draw a horizontal line. And let's go, it was 83.25. Not quite sure now, we will check it just in a sec. 83, yeah, 83.25. So that's how we have high and low of the previous day. Now, what we are going to do next is to look, so this was the daily chart, what we are interested in. What we're going to do next is go to hourly chart and see how we are standing. So in the hourly chart, we are below the 200 EMA. So generally the buyers should be short, right? Like with this beautiful pullback setup over here. We would be really rich if we, according to the pullback strategy, sold here and bought back in around here, right? So this is generally what we will consider that we are sort of going to form a pullback strategy if the price bounces back, which it already did in here, or we are going to form a breakout strategy if the candle finishes below the teeth of the 1 hour chart. So remember that being below 200 EMA, it doesn't necessarily mean we can't go long if the pullback strategy setup appears. But the breakout strategy would have stronger support in my perspective. But okay, so what we are going to do in here is to attack a potential high of the market according to the market structure of the 1 hour chart. We can see that there was some sort of consolidation in here, and also it's in the area of the 200 EMA. So we will set this with a different color. Okay. And now we are approaching with the price action. You can see it on the 3-minute chart to my entry, which is the teeth of the hourly chart, which should serve as a support. There's also 200 EMA on the 50-minute chart, which also should serve as a support. So this chart is the same chart as here right now, right? So we've got the supports of the teeth, we've got the supports of the 200 EMA on the 50-minute chart, and most of all, if you look at this red line, when we go back to the daily chart, you can see that it's this red line. It's the high of the previous day. It's high of the previous day. So if we go back to our basic 2000 tick chart, what we can see here as well is that in these days, in this day today, the 14th of January, the price has actually bounced back off of this area of the previous day's high twice already. First time and the second time. So it makes actually sense to put our limit buy order in this area. Aim for 4 points, risk 3 points, maybe 2 points would be more to the point, but let's just have some breathing area there, since this is just for one contract for 4 points, which is my pre-made limit order, and one contract is enough, as I am trading on 13 accounts by Apex, from of which 3 are funded. Those are the accounts where I actually take payouts from, and 10 are evaluation stage. So let's see, we can turn this one off. Let's see if this analysis and this conviction, this sort of bias of the market will bring in some success. And if it doesn't, if we do not test the previous day's high again, like this order doesn't get filled, we are on the 2000 tick chart in the area above the 200 EMA. So I will be looking at the breakout strategy around here. We can see that there was a beautiful textbook like pullback strategy in here, buy in here, sell in here. We are up how many points? This is 94. This is 04. That's 10 pointer like nothing. But this was during the time of the morning in my time zone, and I was not at screen, which is a pity, because this would be a beautiful 10 pointer trade if we followed the rules of my system as they are supposed to be followed. So yeah, we are in the territory of being above 200 EMA on 2000 tick chart, on 50-minute chart, on 5-minute chart. 3-minute chart doesn't really matter that much in this case because it's too low of a time frame. But we are in the territory of being below the 200 EMA on 1 hour chart, but doesn't mean we can't form a pullback strategy here and test the 200 EMA. So if we will make a breakout strategy on the 2000 tick chart, I will go long there if this order does not get filled. So let's see what happens. Also, we can see that there was a sort of pullback strategy formed on the 5-minute chart, struggling around the 200 EMA, which is not that clear. Also, the previous candle finished below the 200 EMA, and also that the price is actually struggling now on the 200 EMA on the 50-minute charts, and also on the teeth of the hourly, on the hourly chart. So maybe this was the correct entry point for this trade, being straight on the 200 EMA 15-minute chart. But yeah, then the stop loss would have to be a bit wider, which I'm not really comfortable with. So if you are not comfortable with a stop loss, with the potential loss of the trade, you should not enter the trade. And right here, I'm okay with this setup that I put the limit order in here. So let's just keep it that way. And if the price turns and goes up without me, like in the case we should have bought uh, at the 200 EMA of the 15-minute chart, I will buy this on the breakout strategy on 2000 tick chart. So let's see what actually happens. Okay, so we are in the trade. I've heard it from the other room, sorry. And yeah, there was a dump where we went like 2 points down and just 1 point from our stop loss. Now recovering a little bit, being a little bit in profit, but the teeth on the hourly charts are trying to hold the door, but I'm not convinced in this trade that much now, because the 5-minute chart uh is sort of confirming its position in this pullback setup, ignoring the 200 EMA completely. And on the other hand, on the 50-minute chart, the 200 EMA was broken and the candle finished below it. So this might be testing at least the 200 EMA on the 2000 tick chart, which is bad news for us because our stop loss is nowhere near it, let alone under it, which would be ideal. But that would be a big, big gap of about 8 points. So we cannot afford that. We just might have to take an L in here. But let's see. Stop filled. Okay, we just got stopped out for a loss of, should have been $150, but with a slip, it's $162. Now we can see the price plummet. So, okay, this breakout strategy to the downside actually worked out. And you can see the price went up to test the 200 EMA on the 15-minute charts. It got rejected, so it naturally goes down now. So, yeah, we relied on uh, the previous day's high and the 200 EMA on the 15-minute chart and the teeth of a 1-hour chart to hold the door to present the support, which was now broken basically. And there's a breakout strategy forming on the 1-hour chart. Uh, it will probably test the 200 EMA of the 50 of the 2000 chart now. And remember, this is not some kind of hindsight analysis. Like, of course, we should have done this. Of course, we should have done that. But this is in real time stuff. So the analysis was wrong, basically. We took a loss, and we could buy the 200 EMA on the 2000 tick chart, like set up another buy order here, but now it looks like a catch in the fallen knife, basically. So you might be aware of this strategy I employ sometimes, the buying or selling the 200 EMA. But now we took a loss, so that's kind of a risky setup in a downtrend, which is sort of obvious. And the analysis didn't hold through, so we took the loss, and that's what happens. So I will pause the video now, I think, and we will try to we will try to take another trade in the New York session. This is New York pre-market. Basically, the market opens in about an hour. So yeah, you can see now we tested and reached the 200 EMA on the 2000 tick chart. So let's see if there will be another setup waiting for us. And basically now, if there is a pullback on the 5-minute chart and the 3-minute chart, with the price remaining below the 200 EMA on the 50-minute charts and below the teeth on the hourly charts, we will be looking for a short. So let's see how it works out. Okay, so there were news at an hour before the New York Open. So buying the 200 EMA on the 2000 tick chart would be a great move, but yeah, that's what I could have, should have. It's a high side, but right now we are looking for the pullback strategy in here. And if it forms, I might even go with 2 contracts actually, because the news can propel a strong upside movement to be the impulse, and pullback strategy is forming on the hourly chart. So 2 things can happen. We can form a pullback strategy and retest the previous high, in which case we will enter long, or the market can neutralize the news and continue in its path, basically ignoring the news, so to speak, with going to the area of the price where it was below. So it can be like this up and down movement where nothing really changes, or it can follow the news. So let's see what happens. Okay, so the modern pullback strategy might be forming here if we manage to go above the lips and the teeth. So let's see if it manages to do so. The standard pullback strategy, the classical one, did not work out, as we can see here. But the the jaw of the 2000 tick chart is holding so far for these 2 candles. Doesn't look so convincing right now. So let's see if the Gator of the 50-minute charts holds this. Order filled. Okay guys, so I entered long here. Bit of a controversial, since the 2000 tick chart, the Gator is sleeping basically. But we saw that the price tried to go down. It tried really hard, but it got rejected basically on the premises of the gates of the 50-minute chart. And the 50-minute chart actually formed a breakout strategy. You can see the candle finishing above the teeth. And also the hourly chart is looking good at forming the pullback strategy. So we will now aim for a higher take profit, since the first trade was loss, and we go for 10 points actually in this trade, so targeting the previous high. And we will also risk a bit more to go below the jaw of a 2000 tick chart. So basically we are risking 6 points. You can see that I switched from the strategy of 2 contracts to 1 contract, because this is a sort of a risk trade, since it's a post news trading, which is also a little bit sketchy. So yeah, 6 points is 6 points is risked. 10 points is the potential gain. So let's see how this one will work out. Stop filled. Okay, stop filled. Minus 300 bucks. This is spectacular spanking I just got from S&P 500 for the day. Minus 172. $3.50, minus $300. Yeah, basically, I don't want to be rude, don't want to be vulgar. Uh, this is basically how trading works. It's disappointing, for sure, but you have to have days like this. Was this the soundest setups of all? Not really. Was it a smart decision to trade this soon after the news? Definitely not. Was it a smart decision to go in a trade when the Gator was definitely telling me that it's not a good opportunity to trade because it was not a clean pullback, you know, the kind of finish below the teeth and here and below the jaw in here. So it's obviously a range in market right now, sort of a consolidation after the news. And it was a bad idea to trade basically. But you know, the previous trade or two trades influence you more than the trades that in months time prior to that. So this loss forced me to basically take this trade, which objectively I should have not taken. And if I didn't take this trade, or if this was a winner somehow, I would definitely not take this trade. So yeah, this happens. Everyone who tries to trade for real um, knows that this happens, and there was a major a blunder like decision in this session. And well, it's sad, but it's not even New York session time, and I'm finished for the day because this is two losses, and I will not be making good enough decisions from this point on, because that's how mentality and psychology of trading works. So this is done for me for this day, and two losses. What could have been done better? With the first trade, yeah, maybe follow the Gator and don't follow the price action or technicals like support of the previous highs and all of these jazz, because um, it tends to have good results. It really does, but it don't work out in this instance. And I should not be relying uh, only on technicals in a way of previous highs and where is the 200 EMAs and where is the Gator, and rely on a sort of a bounce back like it works two times, it must work for the third time as well, which it obviously doesn't. Or maybe even it does, and this is sort of like the standard deviation of the price movement, which means that maybe we should have traded micros and have a wider stop loss that is somewhat below the 200 EMA. Yeah, this is all lots of talk about nothing because it's like the post hoc analysis. It's the genius of hindsight. We know we shouldn't have taken these both trades because they're losers, obviously. But at the moment, it seemed like good decisions. And what we can learn from all this is just to keep it simple. I mean, it's always good to know. It's always good to know about where is the previous day's high and low, what is happening on the hourly chart, which is right now struggling to form the pullback strategy, to be perfectly honest with you. But this is a big uptrend in the bigger picture, so maybe it can happen. If it doesn't happen, I assume the price would move further downwards, but it doesn't matter now. So maybe if we are trading as Gator traders with the technicals like previous day's highs and lows and all of these jazz, the gaps, the imbalances of the price, we should always combine it with the Gator because that's the thing I'm familiar with. That's the thing I have years of experience in, and I should be trained based on that because this trade was not supported by the Gator at all. It was catching the falling knife basically, and this trade was supported by the Gator partially on the hourly chart, but the candle was not finished, which we now see that the setup is not even valid anymore, basically at this point of the time. But we still can't say what's going to happen because there's like 2 more minutes for this candle to finish on the hourly. On the 50-minute charts, it was sort of met for the breaker strategy, but there was this huge wick, and the price got pushed below the jaw of the Gator, as it's trying to do now. By the way, again pushing below the jaw of the Gator, and this was obviously our main time frame. The 2000 tick chart was not having this. Right, straight I'm not having this with the Gator puts to sleep, which means the lines, the lips, the jaw, sorry, the lips, the teeth, and the jaw are very close to each other, intertwined in each other, and it's sort of a mess where alligator sleeps. It's not feeding, and it was also trading straight up right after the news, which is never a good idea. So this results in a 2 losses, and when I come back, the thing that was supposed to that I'm supposed to do is not trade just based on the technicals and look at it as it's a bloody downtrend, so don't catch the falling knife. And to keep it as simple as possible, like be aware of the previous day's highs and lows, but rely only on the stuff you know, on the gators, on the pullback strategy, on the breaker strategy, and take on the quality setups on the 2000 tick charts supported by the uh, observed time frames. And take trades like that. So uh, that's a good lesson from today, which cost us about 300, 460 with commissions, like, I don't know, $425, 400 up to $500 in the loss for the day. So that's it for me today. I hope that despite this not being winning trades within days, it's also important to show mistakes, which I'm still doing quite a lot. But one bad day should not should not make us too gloomy or too sad about this, because we know that in the long term we have positive expectancy and we make money in the long run. So disappointed for sure. um Leaving today off the markets, we'll focus on something else, and just to clear my head and to come back tomorrow. So that's it for me. Yeah, that's it for me for now. Sorry, because I'm still thinking about the losses, and you can see that clearly I'm not in state of mind to take another trades today. So I will try to reset till tomorrow, and see you then. Yeah.